Today we'll hear and learn more about those efforts and how they are breeding exciting changes and resulting in greater success. To that end, it is our honor, privilege, and a pleasure to welcome the Acting Comptroller of the currency, Mr. Mike Hsu. Mr. Hsu became Acting Comptroller on May 10th, 2021, upon his designation as First Deputy Comptroller by Secretary of the Treasury Janet Yellen. As Acting Comptroller, Mr. Hsu is the Administrator of the Federal Banking System and Chief Executive Officer of the OCC, which supervises nearly 1,200 national banks, federal savings associations, and federal branches and agencies of foreign banks that serve consumers, businesses, and communities across the U.S. and conducts approximately 70% of the banking activity in the United States. These banks range from community banks serving local neighborhoods to the nation's largest, most internationally active banks. The Comptroller is also serves as a director of the FDIC and a member of the Financial Stability Oversight Council and the FFIEC. Prior to joining the OCC, Mr. Hsu served as an associate director in the Division of Supervision and Regulation at the Federal Reserve. In that role, he chaired the Large Institution Supervision Coordination Committee, Operating Committee, which has responsibility for supervising the globally systematically important banking companies operating in the U.S. He co-chaired the Federal Reserve's Systematic Risk Integration Forum, served as a member of the Basel Committee Risk and Vulnerabilities Group, and co-sponsored forums promoting interagency coordination with foreign and domestic financial regulatory agencies. Mr. Hsu's career has included serving as a financial sector expert at the International Monetary Fund, financial economist at the Department of the Treasury, helping to establish the Troubled Asset Relief Program, or TARP, and as a financial economist at the SEC. Mr. Hsu began his career in 2002 as a staff attorney at the Federal Reserve's Legal Division. He holds a Bachelor of Arts from Brown University, a Master of Science in Finance from George Washington University, and a law degree from NYU School of Law. Please welcome Mr. Hsu. Joining Mr. Hsu today for our first session, I'd like to introduce Bank on Women's two founding members and directors, Terry Spiro, who is chair of our board, and Jennifer Doherty, our chief executive officer. Terry has wide-ranging CEO, executive level, and director experience, which includes top 50 multi-regional, regional, and community bank platforms, most of which are public companies located in the Mid-Atlantic. As a serial CEO, she has a proven track record in the formation and startup of new banks, performance improvement in established banks, and the recapitalization and turnaround of troubled banks. Most recently, Terry was the president and CEO and director of Cecil Bank Corp. And Cecil Bank, where she was recruited as a white knight in November 2013 to lead a turnaround of Cecil, a highly troubled 60-year-old community bank in Northeast Maryland. During her tenure, Terry led a turnaround team that dramatically reduced the company's risk profile, addressed the bank's urgent liquidity issues, and succeeded in completing the bank's $30 million recapitalization. Terry is chairman and CEO currently of TNP Financial Enterprise Consulting Services, which provides a variety of consulting services to banks, boards, investment banking firms, and others focused on the financial services industry. Terry is also a frequent speaker and panelist on a variety of financial industry topics, including performance and other key benefits derived from gender diversity in financial services. Jen Doherty is Managing Director and Associate General Counsel in the Financial Services Group at Piper Sandler. She has over 20 years of experience as a senior banker and legal advisor, including structuring and executing hundreds of billions of dollars in capital raising for financial institutions. In addition to transformational work, Jen works closely with management teams and boards, providing general strategic and industry advice. She's a frequent national speaker and panelist at industry conferences and regular contributor to articles on banking and gender diversity. I give you now a conversation with Mike Hsu.
Thank you, Jen. And thank you, everyone, for coming this morning. We were talking about how Bank on Women is coming up on our 5-year anniversary and how honestly impressed we have been about the reception of the community banking industry and how much we have evolved over the last 5 years, how much banks are starting to understand the power of gender diversity to enhance performance. And seeing you all today and being able to have this dialogue, and we're thrilled that you've joined us to have this conversation with us, was really part of our vision, because change starts with these sorts of conversations. Like, the OCC recently put out its strategic plan, which, if you haven't read it, you should. You give a great retrospective about the importance of the national banking industry and the role that the OCC plays. And the third prong of your vision, and by the way, this is a 5-year strategic plan. And everyone in this room, I think, is pretty well aware how rapidly the pace of change in the banking space is occurring. And it's interesting, I'm going to read this. You say, it's especially important that we promote a vibrant and diverse banking system. The U.S. economy is the strongest in the world because of its diversity. That economic diversity is supported by a broad spectrum of institutions, especially community banks, and including minority depository institutions, CDFIs, mutual savings associations, and federal thrifts. Supporting them is critical to our mission and vision. So, can you explain the importance of diversity, both internally and more broadly, to your stakeholders?
Sure, and I just want to start off by saying it's a real honor and a pleasure to be here. I've been really looking forward to this for some time, so thanks for having me. I had a boss once, a woman, who had this exercise of going through the 5 whys. You know, why? And so we talk about, well, you know, we are, at the OCC, we are focused on safety and soundness. That's our mission. Why is that important? Well, because banks are important. Why are banks important? So you keep tracing that back. And when you trace that back, it comes back to, in America, in the United States, we have a very diverse society. And that society has a very diverse economy around that. And that is part of what makes us special as a country. It's part of what makes us strong as an economy. And then you'd say, well, we need a banking system that can support and reflect that. And I think that that's good to kind of ground why. Like, why do we do these things? Because it's both it informs both a practical purpose and a moral purpose. And I think it's important to think about both of those simultaneously. And so one of the benefits of strategic planning is you get to ask yourselves these deep, long-standing, long-term questions, which normally kind of fade in the background, getting through the day-to-day and the week-to-week. And it's good to ground ourselves in that. And, well, why is that important? Because sometimes you get lost in the words. Right. And it's really important because, you know, it's very important to have big banks as we got, you know, a big economy, big companies, et cetera. But also, communities have very, very different needs, and communities in a local geographic sense, communities in other senses. And so each of those has different banking needs and can be supported and promoted in different ways. And so therefore, I just think it's important to kind of be reminded of that, and then to have that as part of our compass to inform how we go about our jobs, both externally and internally.
It's interesting you say that. When we founded Bank on Women, we were very intent on focusing on community banking. Now, that's the industry that Terry and I have spent our entire careers in, but it really was based on that principle. Yeah. We are so fundamentally committed to community banking because we have seen how powerful it is in supporting the U.S. economy. Small businesses account for so much of the economic engine of the country, and community banks historically have been the real support for that. And obviously, we were talking about this just earlier, we saw that in spades when the PPP program was rolled out.
Yeah, I would add to that too that, you know, the smaller banks are greater numbers, of course. Yeah. And we knew, of course, that the larger banks would have other external forces that would come to bear on diversity and other things that they would need our help. But the smaller banks, the community banks, we felt we could basically bring to bear change. And we're an educational organization first and foremost. And so that was why we thought community banking was our sweet spot. Yeah. They needed our help. They're greater in numbers. And also, quite honestly, and we'll talk about this later, what you find with community banks and their boards is that they typically rely on friends and family recruiting in terms of getting their board members. We're going to share some slides as a part of this presentation and this Q&A. And one of the first slides you're going to see is about, women and women in banking and why we've sort of taken up this crusade. And so the first slide you're going to see is that women form the majority of so many constituent groups in the community banking world, customers, employees, owners, and the community at large. And that group provides so many benefits to community banks and banks generally. Access to customers, employee retention, the ability to recruit, and also innovation. And we've got data and research that support all those things. And the combination of all those things help community banks drive performance and affect their bottom line. But what we always find interesting in this next slide, which we refer to as the paradox slide, really tells the tale. And is the one that you can look at either, as the glass is half full or half empty, depending on your perspective, whether you're an optimist or a pessimist. I choose to be an optimist. But you see that even though women are the majority of this constituent group that I just outlined for you, and they're essential to performance in so many ways, and they have so much education and other talent to bring to bear, you can see behind me that they're out of balance with respect to the governance aspect and the decision-making, whether it be C-suite or boardroom, with the vast majority of the community banks in this country. And so we try to explore and we try to answer, why is that the case? And what can we do about it? So I have a follow-up question for you. I too have read the strategic plan. It wasn't because I had insomnia or anything like that. I found it riveting, actually. It prevented me from sleeping. It brought a lot of questions to mind. It really was well done. I do want to compliment you. One of the things that brought to mind, and I wanted to pose this in the form of question, you've mentioned, and I've seen this in speeches you've given, and I really am fascinated about this correlation that you draw. You say that diversity is tied to safety and soundness. Can you sort of share your thoughts on that relationship?
Sure. So there is I can boil it down to, there's a book by Heffernan on blind spots. It's fantastic. And what she talks about is really, we all work in organizations that are quite large, have lots and lots of committees and groups and things like that. And so in large organizations, you need some mechanism to make decisions for the whole organization. So you get into these committees. And we've all been in these meetings where there's a really important thing that's being discussed, and it's very hard to talk about the thing which no one wants to talk about, but they really need to talk about. And so you fall into groupthink, and it happens over and over and over again. And it gets to the point where you just kind of accept it. That's just what happens. And she really details that quite well. And it's something we've all lived. And so from a safety and soundness perspective, this can be deadly, right? In terms of large banking organizations that are making really big decisions about what to do or not to do. And as we saw in the 2008 financial crisis, and I know I have some colleagues in the room who are, with me, kind of fighting that fight. That's a really scary point in time where it's not just one or two, but a bunch of institutions kind of fall into that groupthink. I will note, I was at the New York Fed the weekend that Lehman Brothers failed, and there were a lot of meetings, and I very distinctly remember being in the room with, they called them the 14 families. Like basically the CEOs, the leaders of all the major banks, was at the time Secretary Paulson, New York Fed President Geithner, in a room talking about like, okay, what's going to happen? There were no women in that room. I'm pretty sure I was the only person of color in that room. And so, that is, this didn't occur to me until later, but like that says there's something revealing about that. And I think part of this is, look, we all need to be challenged. All of us need to be challenged in some way. That's how we get better. And part of that means having a diverse set of voices, not just at the table, but like willing and able to speak up. And we have some work to do on that.
That's a great example you just shared.
So we're going to hear from Ann Owen a little bit later today, who has conducted some incredible research on the correlation of critical mass of women in leadership and bank performance. And I'm going to steal Ann's thunder, but what she found is that correlation was even more significant during the financial crisis. Mm-hmm. So I think your point is really well taken and borne out by the evidence. There are a lot of words up here. We'll send the slides around to everyone, but what Mike's described is the concept of cognitive diversity, and this is really measurable, right? So when you have different voices in the room, you're going to have broader idea generation, be able to resolve problems faster, resolve conflict better. And I think, like, you make a very good point, that's not always comfortable. Right. You're going to have people saying different things, proposing different ideas, but you will get to a solution faster by getting all those different ideas out on the table. Another study found that businesses run by culturally diverse leadership teams are more likely to develop new products. We talked about some of the challenges facing financial institutions right now, and in particular coming from the non-bank sector. You've got to have the right people in the room to be able to adapt quickly. I'm going to go back one more minute. Just one other note on the performance. Bank on Women has been working with NASDAQ. For those of you who don't know, NASDAQ has rolled out a director diversity disclosure rule, which simply says that publicly traded companies on NASDAQ have to share what their diversity statistics are. And the logic behind that is exactly this. Yeah. Investors, one of the constituents, care. They want to know that the right people are in governance to make the tough decisions. And so we looked at the data about how banks that are traded on NASDAQ, and most banks, by the way, are traded on NASDAQ, how those with at least 2 women performed versus banks that had less than 2 women on their board. And whether you look at it on a median ROA basis, on a gap or on a core basis, for the most recent quarter, year to date, or last 12 months, and by the way, we continue to roll this data forward, there's a consistent trend that banks that don't have the voices in the room, and I think there's a very good point I want to just elaborate on, able to speak up. So if you're the only person in the room, speaking up might not be well received. So I think your observation is so spot on and so supported by the research. Talk a little bit. You mentioned about banks representing their communities. Mm-hmm. And talk about diversity as an important characteristic in building trust for banks in those communities, and the connection between bank leadership and that trust element. So
I was in a training once, and a D&I training, and the instructor was excellent. And she had shared this 4-level of trust model, which I think speaks to this in a bit. And she said there's 4 levels of trust. The first level of trust is where you know the other side is not out to get you. That's usually pretty easy. Not always, but that's usually pretty easy to overcome. The second level of trust is where the other side will actually take time to listen to you. Okay, again, that's we'll have the meeting, we'll hear you out. The third level of trust is where the other side deeply understands where you're coming from. She's like, that's where usually most people fall down. They'll have the meeting, they'll listen, but they're actually waiting to talk rather than actively listening and understanding where you're from. The fourth level of trust is when you're not in the room, they will accurately reflect your views when you're not in the room. How many people can achieve that fourth level? And that really makes you stop and think like, oh, okay, am I doing that for others who think that I think that they trust me? Probably not. And are they doing that? And that, I think, speaks a bit to this idea that, that inclusion is more than just having someone in the room. I mean, it's important to have someone in the room. I don't want to understate that importance. But I think part of having more people there is that it's a check on that third and fourth level of trust. And ideally, we get to that fourth level where it doesn't matter. But it doesn't matter because there's that deep understanding and that trust that even when you're not there, I'm going to say, you know what, Jen's not here, but this is what she would say. And I do that accurately. And you know I'm going to do that accurately. And then like that takes a level of relationship building that I think it's beyond what I think a lot of kind of the typical programming on D&I is about, but that's pretty critical.
You know, as a follow-up to that, would you say that that requires the person who's in the room expending political capital?
Absolutely.
And isn't that a form of sponsorship?
Absolutely.
Yeah.
Absolutely. Yes, you have to spend political capital. You have to do things. Look, we have to do things differently. I think that's just, if you can't get to a different result doing the same thing over and over again. And part of that is, I want to go back to a comment that you were saying, Terry, about, with community banking, one of the greatest strengths of community banking is relationships.
Right.
Community banks are really good at relationships, right, with their customers. That can also be a bit of a trap because I think relationships are very, very sticky. Mm-hmm. And so when you talked about friends and family, well, there's just a way of doing things. And if the way of doing things is narrow, it's going to continue to be narrow unless we actively seek to broaden that. Within our strategic plan, just a quick plug on there, we talk about cultural fit versus cultural enrichment. Mm. So one thing I often hear when you hire someone, oh, they're a good cultural fit. We want to hire someone who's a good cultural fit. And on the one hand, who can argue with that? Because culture is important. We all agree with that. On the other hand, it can be very limiting. Because basically you're just hiring people, you're just continuing the status quo. And so a better way, I think, of talking about, well, who will culturally enrich our committee, our organization, or what we're trying to do. And that means bringing in someone with a different perspective. And it's not all pretty. I agree with Jen. It comes with challenges, but that's like family. Family comes with challenges. Thanksgiving is not the smoothest event, which is coming up, but that's part of what makes it special and wonderful and different.
It's very interesting you make that point because we're involved in several searches right now for directors, and a couple of them will go through this interviewing process, and we'll find out, okay, what process have you gone through to find directors on your own? Why haven't you been successful? Tell us about the candidates. And in so many instances, what we find out is the recurring theme, well, they were great candidates, they had great qualifications, they were technically competent, but they just didn't fit our environment. They just didn't fit our culture.
Flag.
And so that's very challenging.
Yeah.
And but to your point, it's also something that has to be addressed because that is a bank, that is an organization that is going to continue to basically see things in a sort of a monolithic way.
And if I can build off of that, so this is not an us-them thing either, because so at the OCC, the executive team, so I have an executive team, 8 executives that report directly to me, and we've gone through some changes over the past year. So now it's 50% women, 50% non-white, and it doesn't just change the conversation amongst those who are women and non-white. It changes the conversation for everybody. Right? They're just in general, everyone feels a bit more free to say, well, here's what I think about X, where I think, again, kind of more traditionally, it's just a bit more predictable. And predictability at the highest levels is a flag because in any large organization, any issue that comes up that high is by nature tough. All the easy decisions have been made. They should have been made, right? All the easy decisions should have been made. So the only stuff that gets up to that level should be really, really hard things for which there should be a diversity of views about how to handle them. And so that's, again, this is one of those kind of being comfortable with discomfort, I think is a little bit of the, what we need to be striving for.
That's an excellent point too, because I've always felt that you don't want to see unanimous votes in a boardroom all the time.
Yeah.
But so many directors are really loath to basically raise their hand and vote against the tide.
Yeah.
So, talking about constituent groups, diversity, taking advantage of your communities, what banks are finally realizing, going back to the power of women, is that if they will focus on women, try to recruit women, try to market to women, pay attention to small business owners that are job creators. As you see on the slide behind me, there is tremendous opportunity for small banks to basically generate revenue streams, fee income streams, whether it be through small business ownership and catering to those types of businesses, fee revenue through wealth management opportunity, and also, as I mentioned earlier, from a recruitment and retention, the employee side, it also benefits. But what banks are now finding is that they've ignored these constituent groups for a long time, and they're finding it tough to sort of pivot and figure out how to market to them effectively and appropriately. It's not something that you can sort of turn on a dime and do effectively overnight. And of course, you need to have the right team to call on these groups. You need those employees that understand these groups and can cater to their needs.
I think the point about trust is such an important one here. So there's trust among the board members that they're going to be able to be heard and that people are going to respect the different views. But there's trust that goes back to your point about the relationships. Community banks are very good about relationships. Well, if there's a segment of the market that you have not built the relationship with, and if you don't see somebody who you think understands what your financial needs are, you're probably just barely above the first level, certainly not at the fourth level. So I think for customers, potential customers, particularly for underrepresented markets, to see there are people at this bank in a senior level that understand what my financial needs are, that will adequately represent them, that makes a big difference in being able to harness that. We're really lucky we have, I'm going to call out Lauren Sparks. Sorry, you weren't prepared for that. But Lauren in the room today. I want to tell Lauren's story because it's an amazing story. But Lauren founded Agility Bank, which is a digitally focused, women-owned and women-run commercial bank in Houston.
And OCC supervised.
I'll let Laura tell her story, but can you, from your perspective in the OC, can you comment on the significance of a de novo like this?
Sure. So I don't have to tell this room. So de novo community bank activity has been, it's been low for too long. And so Lauren's bank, Agility Bank, was the first MDI de novo OCC chartered in, I think, 15 years. Really long time. And so we were very excited at the OCC. And Lauren did an outstanding job of setting up the process and just being very, very serious and determined and diligent. It's just like, we're going to do this with a lot of support. You know, I think it's one of those, it takes a village. It's not easy. It's not just, you know, filing a piece of paper and saying, hey, I want my charter. It takes a lot more than that. And I think it really is a testament to, if you've got the vision, the determination, and the support, a lot of things are possible, especially in a space where others have said, you know what, it's just the path of least resistance to go buy a bank or do something else. And Lauren didn't do that. And I think it's been great because as we talk about kind of the health, how do we ensure that the community banking industry is thriving? Well, de novos, there should be more de novos. And Lauren has been a pioneer and saying, all right, we're going to do this. We're going to do it the right way. And I think that's really just astounding. I had the opportunity to go down to Houston for the opening. It was a lot of fun.
Now, do I have this right? Is Agility Bank the first women-owned bank that's been designated as a MDFI?
So the designations are interesting. So you know at the OCC, we just came out with a policy statement not too long ago about kind of, because there's a lot of interest in MDIs in general, which is great, which is fantastic. I think for a long time, the MDI designation was kind of a nice to have, but now there's money right? So now you've got money and there's support, and there's real support and interest from larger institutions and others to say, I want to do my part, I want to partner. And so that really forced us to say, well, who qualifies? Like, how should we characterize an MDI? And for us, women-owned banks do qualify, and they're part of that definition. We think that's important. Not all agencies take that approach. So there's some differences there, but we think that's really important.
You know, and this, I think, is interesting. Get to the right slide here. In this survey, 73% of women are unsatisfied with the financial services. Yet women are driving 80% of the household decisions around financial services. So, you know, your point is very well taken. Yeah. Why does it matter for a women-owned bank to have that designation? Because women are not being served as financial customers historically in the same way. So the same way that Black-owned MDFI might historically have focused on an underserved African-American community. Women-owned banks are focusing on that community that's clearly being underserved.
So I'll tell a quick story. This is unrelated to banking. So I have my brother, my younger brother. He lives in Eastern Oregon. So he's out in the middle of nowhere, but it's beautiful. And he has a very good friend who owns an auto shop. And he used to service Saabs, and now he does something else. But he quickly realized that almost everyone coming in was a woman trying to get the car. And there was a lot of mistrust with auto repair just in general. And so he decided, I'm just going to hire all women mechanics because the trust level, because women will trust other women. Business was just through the roof. Like they basically clean house in that neighborhood because all of them are like, I trust her. Like I can talk to her. I trust that because they understand my needs. They speak my language, all that kind of stuff. And it's like, it seemed like a small decision, huge decision in terms of business. But I think it reflects kind of what you're talking about there.
Yeah, and it's interesting because, and we've got some data, I don't think we have it here, but probably most have heard that I think it was last year, was not this year, but the year before, was the biggest funding year, VC funding year for fintechs. Yeah. And women-owned fintechs, I think, took in a 1.6% of that funding, 1.6%. They're focused on a huge market segment that's not being served. And in fact, the women-owned fintechs that are out there are returning twice as much for every dollar of investment. So there's clearly a mismatch.
All right, so I can't sit here silently any longer. I'm actually getting frustrated just listening to this conversation. Of course, I've heard it before. But so tell me, why, with all the talent and the client and customer opportunities that are out there for women and the leadership abilities, why are there so few in leadership positions within banks and within boards?
So I think inertia explains a lot, right? Just inertia is just, it's easier to kind of do the same thing. It's safe, it's been done before, it's what you know, and it requires the least expenditure of energy and political capital and other kinds of things. And so I think that explains a lot of it. I don't think that there's kind of an active, a desire amongst folks to suppress and oppress. I think this is different. I think this is harder, actually. Because you can spot that and you can do something about it very easily. This is a more pernicious, it's just kind of in the water, it's kind of in the air. There's a great saying, which I've now appropriated, I've just plagiarized. If you're not consciously including, you're subconsciously excluding. I think that's very true.
Yeah, that's a great line.
I think the typical is that you go into a meeting, you're doing your work, you're like, I'm not discriminating, I'm just doing my job, and I have good, moral compass and those things. But unless each time, and my success rate on this is less than 50%. Like I got my own room to improve, but it's just constantly thinking about, okay, who's speaking first all the time? Okay, who's not raising their hand? Okay, who's circling back and trying to get what they wanted but didn't bring it up? Like there's all these things, and then if you just kind of tick through the who and the, you start to realize, oh, okay, there's some patterns here that probably need to be addressed. And those are all small things, but those small things add up to a lot. And I think they add up to the results that you were just talking about. It's like, why aren't these things they seem so obvious. Why aren't they fixed? And that just, it does take a conscious effort. And then there are these uncomfortable, just like you said before, well, they're qualified in all these ways, but it just doesn't feel like the right fit. Okay, flag. Like, let's talk about that. Like, what exactly is that? Let's work through that, and let's try something different. You know.
I think to that point, Jen, you might put up this next slide. Here are some of the things that women experience that prevent them from getting to the C-suite, or some women who maybe at some point in their career want to sit on a board. It's called the leaky pipeline, because what the numbers show is that men and women enter the banking profession at equal numbers, and then there's a significant fallout, probably about middle management level. And these point out some of the reasons, and it comes down to mentorship, sponsorship. Men are typically guided and directed by other men within the organization at far greater numbers than women. And another compelling factor is that in terms of guiding women, many talented women are suggested in roles that are non-P&L roles. So law, sorry, Jen, HR, marketing, even retail in some respects will not take you in banking to the C-suite. And so if you don't manage a budget, if you don't create revenue for an organization, you don't have the same opportunities as those who do. And so that creates the leaky pipeline. And also, and I experienced this in my career as a corporate lender, as a chief lender, as a bank CEO, the only issue, you're the only one in the room. You're the only one in the market. You're the only one in that job. You're the only one at that conference. And that's a lonely place to be. You don't have peers. And so these are all the things, to your point, that aggregate to a point of frustration and sort of a wall, it might be invisible, that then make women sort of fall out of their career track and lead to these issues.
A couple things. One thing I've noticed too that happens sometimes is that in my experience, I've had a number of women who've either worked for me or worked in kind of other parts of the organization where there's an opening and they're harder on themselves about applying than anyone else. And I'll say, well, why aren't you applying for that? Well, I don't know if I have enough experience. What do you mean you don't have enough experience? Like, of course, who else has more experience? It's a series of questions of a lot of self-doubt. And to be fair, part of that is what makes them so good, right? Part of that is what say, okay, I've got humility, I've got curiosity, I'm going to be careful. Like those are what make for good decision-making and good competence. But in terms of applying for jobs, sometimes you're your own worst enemy. And in that environment, the requirement is that there's both people, mentors and others who recognize that and support that and kind of give the nudge, provide the path. And at the same time, just kind of adjusting behaviors.
You're actually talking about the Dunning-Kruger effect. There's a name for it. And it points out the fact that men will basically
leave their hand for everything.
Well, you see that in grade school even, right? But men will basically consider themselves ready for that next position when they're maybe 40 or 50% qualified, whereas a woman feels like they have to be 115% qualified. And so there's a confidence gap that sort of persists throughout the entire cycle for a woman.
I was very happy when I realized there was a name. I trained a lot of young lawyers and a lot of young financial analysts over the years, and I thought it was just my observation, but there would be a lot of very well-trained women who would come in, I'm not really sure about this, and they would have looked at every reg. And one of the things lawyers learn very young is you do a reg check, even if you think you know the rules. If you've got a deal, you look at the SEC's rules, you look at the OCC's rules, you check again, and you look for recent guidance. And a lot of men would come in and I said, yeah, I know the answer. And so I've spent most of my career training young people to say, you need to trust you've done the right process. You're going to get to the right result. Mm-hmm. Judgment takes a long time to develop. And saying to a lot of young men, you need to make sure you've done the right process before you can feel that confident in expressing that. So it was nice
I've
to
had
know
a couple of bosses tell me
that there was actually something underpinning that. I want to come back to something you've mentioned before, and you've talked previously about how diversity and inclusion ought to be seen together, like mm-hmm. safety and soundness. Yep. And what does that mean to you?
Right. So I do sense that on the diversity side, so we can measure diversity. I mean, we all have our scorecards and things like that. So that tells one picture. And really quick tangent. So at the OCC, all the federal banking agencies have an Office of Minority and Women Inclusion Affairs. And so there's a lot of data that gets gathered that's required. And at the OCC, the aggregate high-level data is okay, right? It's not great, it's not bad, it's okay. The data underneath is different because the spread and the dispersion is very notable, and it really reflects what you talk about, is that, well, certain kind of middle back office functions tend to be disproportionately non-white and women. And so that, once you start like peeling the onion and looking underneath, it tells a lot of different stories. And then you realize that, okay, you have to get beyond just kind of the headline, the numbers part, because this now gets to the kind of the cultural parts, right? Well, what are the cultural elements of diversity and inclusion? And I say this as someone who's been on both sides of this, where people who feel like they really belong in an organization can bring their best selves. They bring their best selves, you're going to get a lot out of them. Like, they'll run through a wall for you. And people who are capable are just capable of a lot. If they're not bringing their best selves, they're not going to do that. They're going to hold back a lot. Nice. And you've got a lot of dead weight loss on your hands. You've got a lot of potential that's unrealized. And so it's, again, part of this is selfish from the perspective of trying to get performance out of folks, but part of this is also kind of what kind of culture you're trying to build. And that sense of belonging is very hard. It's not an easy thing. It's not a splashy, it starts with town halls and things like that, but it requires way more than that. And, again, it's a journey. It takes a lot. It takes a lot. And that's the inclusion part, is that you can get your numbers up, but if you don't get that inclusion, that sense of belonging part, it's half a loaf. And if it's half a loaf, it's not, you're not getting everything out of it. And you almost have a false sense of accomplishment. And I think that in some ways, like, each of these is a high-class problem. It's good to have that problem, but each problem gets a little harder, because that gets harder to say, oh yeah, we hit our numbers, we can move on and not talk about this anymore. I know there's a lot of folks who want to probably do that, but you have to adjust that and say, okay, now here's what we really need to tackle.
I think that's part of the retention challenge. So we talked about, Terry mentioned the leaky pipeline. Well, if people aren't comfortable, if they're not getting sponsored for promotion, if they're not getting championed, if they don't feel like they can bring their whole selves, a lot of people, in fact, there was a statistics that less than 2% of women leave their jobs to focus on the family. And so, and quite frankly, this is really the genesis of Bank on Women. It was a conversation Terry and I were having about how many talented women have left the profession and how much community banking is experiencing a loss of talent already within the bank system. And then certainly a lot of young people coming up because women didn't have the opportunity to actually participate as fully as they wanted to. So I think your observation is absolutely borne out.
Let me mention something to you, and maybe you can help us solve this. This actually keeps me awake at night. And that is the whole concern that Jen and I have, and we talk about this frequently, of diversity fatigue.
Oh, yeah.
And the whole notion, you talk about the NASDAQ rule, of checking the box. A board, let's say, is going to say, well, I've got to have this type of person, so I'm just going to grab the first person I can find, regardless of cultural fit, regardless of qualifications. I'm going to check that box. We really worry whenever we give a presentation, when we try to educate the audience about, they're going to drone on about gender diversity, in the whole concept of diversity fatigue. What are your thoughts about that?
I think it's a real thing. I think you're right to be concerned about it. But I think it's good to think about other analogies. So for folks, I think we all, I don't put myself in this bucket. There's some folks who like late in life realize like exercise is good. And so they start to exercise and they just do it and they just make it part of their daily routine. And in the beginning, it's really painful. But you don't hear people talking about exercise fatigue. Like they just like, okay, they make it part of their routine. They go on a walk, like my dad, he does a two-mile walk every morning. It then becomes habit. And then that becomes the status quo. And then to move from that requires fatigue to do more, whatnot. And so I think part of this is just about habit setting. Like, can we get to a point where the habit setting, because everyone wants something that's self-executing, because then you can just focus on other things. I get that. Like, I want that too. So I do think the way we talk about it, kind of the things to focus on, do require a bit more kind of thoughtfulness to avoid that, because I think this is one of the risks, and it's not just in gender diversity. I think too, like, post George Floyd, huge amounts of support and openness to a whole variety of things, finally. And there is a risk that goodwill runs out, and then instead of like the window slowly closing, it shuts harder than it otherwise would have. And I fear that. And so there is a window of saying, okay, how do we get good habits in place where that becomes more self-sustaining? And part of that is numbers. Part of that is just the way we think about things. It's a whole mix of things. And so there is some urgency around it.
Yeah. Good. Thank you.
I love that analogy. I remember my dad, who's a big exerciser, saying it ought to be like brushing your teeth.
Yeah.
You don't think about brushing your teeth. You just brush your teeth.
I've got 3 kids. They still think about brushing their teeth.
And that's probably a perfect analogy. Yeah. It takes a while to retrain. But that also says it takes a long time to grow a fully competent human being. That's his analogy for raising children. But as an industry, it takes a while to evolve, and you've got to think about it before it can become habitual.
Yeah, that's right.
So we've all been driven by a vision. You set out a great vision for the OCC over the next 5 years. Bank on Women was really just a vision 4.5 years ago, and we're so grateful to be having this conversation with everybody today. I'm going to read back a quote and ask you sort of about vision for the future. We talked about how the pace of evolution in banking is changing so rapidly. Changing demographics, adoption of technology, competition from non-banks on both the lending and the funding side. As a result, we've entitled the symposium this year, Innovation in Community Banking, the Evolving Boardroom. Yeah. Because the boardroom really sits at the intersection and is a critical governing body to move these things forward. So given the increasing demands, how would you see a well-equipped board of the future for a bank? So now I'm going to shamelessly plug our strategic plan, because we put a lot of thought into what to focus on and why. And so if you go against the backdrop of the pace of change is picking up, there's a lot of uncertainty about how that change is going to play out. I mean, 6 months ago, people were predicting crypto would take over the world. That's not the case anymore. Like, there's just a lot of uncertainty about how quickly these things are going to play out. What does that mean for us as leaders of organizations that need to deal with this? Well, we have to be able to adapt and learn quickly. So I think now learning becomes the name of the game. And Carol Dweck in the growth mindset, she lays this out really, really well. And I think what you've seen some companies apply that quite well. So like Microsoft is a very interesting example where it's an organization where I think for some time it was trending in that direction of just being a big behemoth that would just become outdated over time. And at some point, they had a new CEO who said, no, this kind of growth mindset that's the way to orient the strategic vision of the entire company, which I think has, to date has played out well for them. And I think you've seen other organizations kind of move in that same direction. So I think there's something there that, as a regulatory agency, we love our traditions, right? We love our processes. We love
deliberation and doing those things. And those are good things. I don't want to take away from that. At the same time, we have to learn much faster. And we have to learn how to apply those much faster in a way that just requires agility and learning. And how do we do that? You're not going to do that just doing the same thing with the same people the same way. And that's, again, that comes, to me, loops back to diversity, not just with women, in terms of race, age, like there's a perspective. At the OCC, we've got, I was used to, in my old job, dealing with a lot of New York, large GSIBs based in New York. Now at the OCC, we've got 1,100 banks, 90 offices, 2,500 people across the country. I spend a lot of my time out. There's a lot of different things out there. And they're challenging, they're interesting, they're enriching. Like it requires a lot. I think we have to bring much more to the table in terms of this receptivity and being able to kind of synthesize it and respond to it. And that diversity is a huge part of that. It's integral. It's not a nice to have. You can't do that if you just got groupthink all the time. And that to me, that's just kind of a natural fit, natural complementarity. Like that's the objective. How are we going to achieve that? The only way we're going to get there is by kind of integrating these parts, which, I think it resonates with folks. Now, how to get there exactly is the harder part, but then we can learn from each other. And I think this is something, I go back to community. When I talk to community banks, MDIs, it's interesting. A lot of the times in the conversations we at the OCC set up, they start talking to each other.
Yes.
And I'm like, all right, let me just quietly get out of the way, because that's really valuable. And I think before that was kind of, oh, that was nice to have that hallway conversation. I think we need to institutionalize that. I think that's something that needs to become part of what it means to be a community bank, an MDI, is that you have these networks where you're really you're collectively learning. It's not, if each bank has to learn the same lessons over and over again, that's a really inefficient way to do it. You have peers that have done this. Learn from them. And you've learned something that you can share with your peers. There's collective strength in that. And at the OCC, we've got a bunch of different projects where we kind of use that philosophy, Project Reach and others, kind of use that philosophy to try to help everybody, kind of raise the bar for everybody.
Well, I don't know about the audience, but I could continue this conversation all day long, but we have to bring it to a close. And I'm going to give you the last word, but I first off want to thank you again for being here and for sharing with us today. And I also want to thank you for being a champion of diversity. So final comments, final words. I just want to return the thanks. And I guess I have a request, which is that you hold us accountable. It's in some ways easy. I feel for me, it's somewhat easy to say these things. These are things that I believe strongly. And they're easy to say, they're harder to do. And they're harder to do sustainably over time. And I expect that if we're not holding up our end of the bargain, if we're not doing as we say, we should be held accountable just like we're holding others accountable. And the diversity issue is one where I push banks and I expect to be pushed, because we have, at the OCC and the federal government, we got work to do. And so I think that's fair. And I think that is, we want to practice what we preach. So I ask that you guys do that for us. That'll help keep me and the organization honest. And that'll help us kind of get to the next level. Thank you very much.
Thank you.
Thank you so much.
That's fine. Thanks so much.